Welcome back, investors, to Ticker Time News. I'm Adam. In Take-Two, ticker symbol TTWO, their shares are down slightly following the company's downbeat Q4 guidance. The pandemic's positive effects on gaming are beginning to cool off. This is now the second consecutive quarter in which the video game publisher, which owns franchises such as Grand Theft Auto, NBA 2000, and Red Dead Redemption, guided quarterly net bookings significantly below estimates. As Take-Two CEO stated during the company's Q3 earnings call, that Take-Two is now seeing what he says as normalized demand. Investors may need to start quelling their expectations before moving forward. Okay, before we get too far into Take-Two's Q3 earnings, smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if it's your first time watching, then consider clicking that subscribe button so you never miss a video. All right, my friends, thank you for doing that. I think the main takeaway from Take-Two's Q4 net bookings guidance of $808 to $858 million is not so much that it is below estimates, but that it translates to just 6.3% growth at the midpoint, which pales in comparison to the outlook of video game publishing powerhouse Electronic Arts, ticker symbol EA. Last week, EA guided revenues slightly below estimates. However, EA still expects solid growth of 18% year over year next quarter, which is in stark contrast to Take-Two. EA is also lapping more favorable quarter. Its revenues jumped 18.8% a year ago, whereas Take-Two is lapping a much easier 7.6% increase. Despite its light guidance and its comments regarding demand normalization, Take-Two still posted strong Q3 numbers, followed up with upcoming catalysts that should provide shares with future upside. For one, daily active users, or DAUs, of NBA 2000 rose 10% year over year to 1.9 million. The franchise remains a pivotal component of Take-Two's growth, particularly given its popularity overseas. For example, it remained the number one online PC sports game in China with over 55 million registered users, up from 51 million a year ago. While EA has its FIFA franchise, which is one of its primary revenue drivers given its global appeal, Take-Two competes on the sports gaming front with NBA 2000. Take-Two's Grand Theft Auto franchise continued to be a standout. For example, the remastered versions of the three older Grand Theft Auto titles helped drive Take-Two's 6.4% net bookings growth year over year in Q3. Furthermore, the company's Grand Theft Auto 5 title continued to exhibit strong sales growth, despite being almost 9 years old at this point, as monthly online engagement in 2021 matched the record levels from 2020. I believe Take-Two's Grand Theft Auto series, it is a key competitive advantage over peers like EA and Activision Blizzard, which has, by the way, been purchased by Microsoft for over $68 billion. For example, last week, investors pushed Take-Two shares higher on reports that development for its next entry in its series is well underway. As such, even with Take-Two's light Q4 guidance, investors are looking ahead to 2023, when it is rumored that the next iteration of Grand Theft Auto will launch. Lastly, although investors had a cold reaction to Take-Two's plans to purchase mobile game giant Zynga at a 64% premium, I think the acquisition has substantial benefits. Through the deal, Take-Two would vastly expand its mobile gaming presence, which is essentially a must-have these days, given how increasingly mobile consumers have become. Take-Two also expects at least $500 million in annual net bookings over time from Zynga, making the premium price tag more sensible. Overall, mild Q4 guidance is somewhat overshadowed Q3's solid numbers. Also, aside from the seasonal updates to sports titles, Take-Two does not have any huge releases slated for the remainder of 2022. So normalized demand trends are weighing especially heavy on the stock, as not much is expected to reignite gamer enthusiasm in the near term. Now, many of Take-Two's franchises are too critical to its success to be rushed through development, risking a very disappointing release. Such hastiness has plagued the video game industry before, as with Battleground 2042 from EA and the remastered Grand Theft Auto titles. It can discourage loyal fans indefinitely. Well, that's what I think about Take-Two right now. But I want to hear from you. What do you think about Take-Two's downbeat Q4 guidance and this normalized demand quote by its CEO? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if it's your first time here, click that subscribe button so you never miss a video. Thank you so very much for watching, and I'll see you in the next video.